Hello guys, welcome back to my YouTube channel, and thank you for those who are subscribing to this YouTube channel. And if you are new to this channel, I want you to subscribe to this channel, turn on post notification, and each time I release content like this, you always want to get notified. So in previous episode, we actually talks about the introductory aspects of forex trading, and in today's episode, we are getting into deep more process about what forex trading really entails. So I want you to sit back, have a juice with a popcorn, and get relaxed for this video as you will be learning some important things about forex trading. So to start with, let me share my screen so we can get on point with our discussion. So this is part 2 of our forex trading, and in today's episode we'll be covering what we have in our outline. Outline 1 says what is a pip and pipet, what is spread, forms of trading, orders, lot sizing, risk management 1, and MetaTrader interface. So now to start with what we have first in our content. So it says what is a pip and pipet. Now in forex trading, what you need to understand is that we make our money in forex trading through pips. That is, we count our profit or loss in pips. So you need to understand what pips is. Pips is actually the percentage movement in price. So let's say, for instance, I'm a Nigerian. Let's say the price of Naira is 5 Naira. And then, peradventure, Naira appreciates. So let's say we have Naira at 6 Naira. So the difference between the 5 Naira and 6 Naira is actually 1. So we will say that Naira has moved 1 pip in profit. So the same thing goes as if Naira is depreciating from 5 Naira. If it depreciated to 3 Naira, you can see that the difference between 5 Naira and 3 Naira is 2 Naira. So we say that Naira depreciated with 2 pips. So this is how to know what pips are. I'm going to show you a live example whereby you are going to really understand this concept very well and how pips are being calculated for various currency. So in previous episode we talked about major currency and minor currency. So I'm going to be walking us through on how to calculate pips for this currency pairing. So let me share my whiteboard so as to explain that very well for us. So all right guys, so now on how to calculate pips. Let's say we have, okay, let me use this current chart to explain to us very well. Let me use this to explain to us. Okay, now this currency is NZD USD. So NZD USD, the current price is 0. Let's use this one. Let's use this because this price is actually from 20 now. We have 0.63055. 0.6355. So NZD USD. Current price is 0.63055. Now, this is the price of NZD USD. So now to calculate the pips, if you look at the decimal point, we have how many numbers after the decimal point? We have 1, 2, 3, 4, and 5. So now to understand the pip here, the pip is actually the 4th number after the decimal point. Listen to that again. The 4th number after the decimal point. So after this decimal point, we have 1, 2, 3, and 4. So this 5 here is the pip. This 5. Okay. This 5 that we have here is the pip. Why the last one? The last one, the 5th number after the decimal, is actually the pipette. In first trading, we don't really, pay close attention to it because it's not that relevant. It's not that relevant. We only consider the 4th number after the decimal point. So if you want to calculate your pips, you actually use this 4 number. We don't consider this last one because it is called the pipette. The pipette works like, let me say, it works like a seconds. Yeah, it works like a seconds on your wall clock or on your wristwatch, anything. So it's like, let's say if you are asked to check what the current time says, my current time here is saying 2:57. I don't mention the seconds. Do you get it? I don't say this is 2:57, 30 seconds. Do you get the seconds relating to time is actually equivalent to pipettes here in forex trading. So we don't really consider it. So what we have to pay our attention to is the 4th number of after the decimal point. So now to calculate this, let's say this is the current price for. So now for you not to get confused, remove this last number. So we want to basically focus on 4 numbers. Do you get it? So now let's say this price now moves from 6305, then it moves up to 0.6308. So now if you calculate the difference here, you will see that we have a slight difference of 3. So the three that is different from the current price to the actual price now is called the pip. So now for this we have 3 pips increase. So we have 3 pips increase on this. 3 pips. 3 pips increase. We have 3 pips increase. So we have 3 pips increase here. So now let me use another thing to because this is actually how pips are being calculated for major currency, even the minor currency. But when it comes to pair that has JPY, that is the Japanese yen, paired with it, the pips calculation is slightly different. Yeah. If you have JPY pairs, like USD JPY, Euro JPY, GBP, we have many of them, many. GBP, JPY, any pair related that is being paired together with the JPY pairs, how we calculate it is slightly different from how it's being calculated from this normal pair. So now let me also bring in a pair that has the JPY. Let me share the screen to you as well, so as to pick a coin number from there. So let's search for USD JPY. So now this is USD JPY. This is the current price, 131.964. You can see it's slightly different from that, which has 5 numbers after the decimal point. But now here we are having 3 numbers after the decimal point. So now I'm going to show you how to calculate your pips for JPY related pairs. So now just hold back. Let me go back to the whiteboard. 131,956. 131,956. So we have 131.956. So now this is the current price of USD JPY. So now what you are going to consider as the PIP here is the second number after the decimal point. The second number after the decimal point. Now the last number, which is the third, also is the pipette. It is acting as a seconds, which we don't have much concern about. So if you are going to calculate this, we are going to use the second number after the decimal point. So let's say peradventure USD JPY dropped to 131.90. 131.90. So now the difference here that we have, if you can use your calculator as well to understand this, because you can't do everything from, we are not calculator, you understand? We are not computer, we are human. You understand what I'm trying to say? So now the difference between this, if you press your calculator, you see that there is 5 pip difference. 5 pip difference. So there is a decrease of 5 pips. So which means that USD JPY got depreciated for 5 pips. The current price was 131.956, and then it drops below to 131.90. I believe you all are understanding what I'm trying to pass out. So this is how it is being calculated for JPY related pairs, and any other pair that is not related to JPY, you actually use this first illustration that we highlighted concern using NZD/USD as a case study. So this is how it is being calculated. And we also have exotic pairs. I forgot to tell us about that in the last previous video. We have exotic pairs. Exotic pairs are like gold. We have XAU USD. Gold is represented with XAU USD. This is gold. We have Bitcoin, BTC USD. Reason why these are considered as exotic pairs is because they have higher volatilities, and the spread that is being charged by your broker is very large. So I won't advise you to go into exotic pairs. Just make sure you practice majorly on the minor pairs and the major pairs, because I personally I don't trade exotic pairs. Even their pitch calculation is actually different, which I don't even want to know. I don't even want to know. I'm okay with, because in forex trading you have to be specific. You have to know your niche, where you are most concerned with. You don't want to be jack of all trade. You don't want to be trading stocks, indices, commodities here and there. You are going to lose your money. So you have to be specific on what you are trading. So I'll just tell you to focus more on the major pairs and the minor pairs. Just focus on currency. These are not currency. Gold is metals. Gold is metals. Gold is metals. And while BTC is crypto. This is crypto for those who will be trading cryptocurrency. I don't know how they calculate the pips for that. I would have loved to just take you guys through for it. So this is what we actually meant by pips and pipettes. So I believe you got something from that. And spread, yeah, spread. So spread is actually the amount that your brokers is charging you for placing a particular trade. Because if you have been an existing trader that you have been using your MetaTrader app for trading, you will notice that each time you press the buy or the sell button, your account will first get into negative. So the negative that you find yourself in is actually the amount that your brokers are charging you for taking such trade. And the spread is calculated with the rate of your lot size that you use. Depends on the lot size you use. So you can't expect someone who is using a micro lot size to have the same charges as someone who is using the standard lot size. As time goes by, we are going to get into lot sizing. Of course, we also have it in our course outline here, which we'll be touching. So now we move to forms of trading orders. Forms of trading order. This is another thing that you guys need to understand when it comes to trading orders. We actually have 4 of them, 4 different trading orders. 4 trading orders. So we have trading orders. Number 1, we have buy stop. We have instant execution. We need to know that first. Instant execution. We have 2. We have pending orders. Pending order. So under this pending order, we have 4 different ones. We have the buy stop. We have the sell stop. We have sell limit, and we also have buy limit. Buy limit. So I'm going to explain this concept to us. So now when it comes to trading, like the chart that I showed you earlier on, okay, we have this current chart here. So now we have this chart here. This is a trading app. So now instant execution means that you can see the current price is here at 131,924. Instant execution means if you are selling this currency here, that is, you are selling at the current market price. If I should press sell, it means I'm selling at 131.938. That is instant execution. But when it comes to pending orders, we have the buy stop. Now, the buy stops means that you want to believe that this market here is a buy trade. So you want to buy, but you don't want to buy at this current market price. You don't want to buy at this current market price. So where you are willing to buy, you are willing to buy when the market gets here. You are willing to buy when the market gets to this position. You don't want to buy it. You felt, okay, it should be expensive for me to buy at this low. I will prefer the price should come up here before I buy this market. So you can place a pending order of buy stop by placing your buy stop here. That is 131.42. 132.342. So if you place your pending order here, so once price starts moving up, as it comes to your point that you have already placed, the market will automatically pick your order. So once price gets here, it's going to pick your buy stop. It means that the buy should continue. You understand? So same thing as well goes to sell stop. Sell stop as well. You don't want to sell at this current market price. You want price to come down a bit, probably here, before you start selling. You want price to come here before you start selling. So you are going to place your sell stop here. So once market got to this place, your sell stop will be triggered, and then you have your trade running. So for buy limit means that, okay, this market is currently selling, because this concept, some people actually, misunderstand, or let me say, their interpretation to it, they actually mix the two together. Buy limit is when the market is selling. The market must be in a selling condition before you place your buy limit. So if the market is in a selling position, like as it is now, the market is selling. So you want to place your buy stop. The market is selling, you are going to place your buy stop. Let's say you want your buy to be here. So you are going to place your buy limit here. and then your buy will got trigger. You got it? Oh, sorry, I made a mistake. Here, you want to place a buy stop. Let's say, the other one I said, you are placing your sell stop because you don't want to sell here. You felt it's expensive, and you place your sell stop here so you can have your sell order triggered. But when it comes to buy limit, you are going to place your buy order below the current market price. Now, price is, we are in a selling condition. So I want price to come down a bit up to this zone before I start placing my order. So probably maybe I'm not on my screen. I just want to place a buy limit that, okay, when price got to this point, then it should trigger my buy. So what you are saying in essence is that once price gets here, you are expecting the market to return. You want price to come down and then trigger your what? Your buy limit. So this is for your buy limit. You want price to come there and trigger your buy limit. Same thing as well, go to sell limit. Now the market is currently buying, but you believe that, okay, this market is still in a selling condition. Once price gets to this point, it should trigger my sell limit. Once price gets here, it's going to trigger your sell limit, and then you expect the market to fall down. So these are the 4 concepts of trading orders. These are the 4 concepts of trading orders. So let's see what we have. We have lot sizing. We have lot sizing next. So now lot sizing, there's actually also in 3 phases. Lot sizing is in 3 phases. We have a standard lot. We have standard lots. We have micro lots, and we have mini lots. I don't want this video to be too lengthy. I'm still going to make a well coupled explanation on lot sizing. So I don't want this video to get long. So let's just proceed. I'm going to make a special video for that. So now to risk management 1. Risk management 1. So here we have a lot of people saying that Forex, they lose so amounts in Forex trading, that never in their life they're not going to trade Forex again. Of course, I that I'm speaking to you, I've actually lost some money in Forex trading when I first start out. And in Forex trading, there's no how you're not going to make a loss. Of course, you will definitely make a loss. You know that Forex is highly risky, and you are actually bringing in something to risk in order to 10x or multiply your capital. So now, for risk management 1, I'll be telling you how to place a stop loss order and take profit order, because you actually want to manage your risk. So now let's say you have a $50 account, and then you don't want to just go all in the market. You want to risk a certain percentage of this amount. So this is actually what you mean by risk management. You want to manage your risk. You don't want to lose everything at once. So we are going to talk about stop loss. Stop loss order, and then take profits. So now stop loss order, it means that you are telling your broker, you are informing your broker that once price goes against your position, let's say you are saying that, okay, price is actually going to move up, but then you are thinking in the opposite end as well, that what if price does not go up and goes in the opposite direction against you? So you are going to set a stop loss order. That's okay. Once price gets to this particular point, I'm okay. I'm willing to take the risk. And take profit is actually the opposite of stop loss order. Take profit means that, okay, when price gets to a certain level, you are satisfied with the profit. So let me show us a live example on trading view. Let me show us a live example. So now let's say this is our current chart. Let me delete all this. Few sec, give me few sec. So now let's say this is the market and I want to buy. I feel like, okay, this market we buy. So I wanted to buy. So what you are going to do here is that there's actually so this is TradingView app. It is a forex app that you can use to analyze your charts. It has a lot of tools. I'm going to show you how you can actually use this on your MetaTrader 4 interface as well. But I'm going to, for this video, I'm going to use TradingView as an example. So now, long position and short position. Long position actually means that you are expecting the market to go up, while short position means that you're expecting the market to come down. So now let's say I'm expecting the market to go up, so I'm going to pick the long position tools and place it at the current market price. So now, here you can see target. This is my take profit, and you can see stop here. It means my stop loss order. So now here it means that if I'm buying at this current market price, and assuming that I want to put my stop loss order below here. Now you can see this number, it has already calculated it for me from the difference between the market price and where my stop loss order will be. So you can see 361. Remember what I told you concerning JPYPS, that we don't consider the last digits, we only take the 2 digits after the decimal point. So now here is 36. It means that on this trade, I'm willing to risk 36 pips. I'm willing to risk 36 pips. Now, another thing you need to know in risk management is that you need to know your risk to reward ratio. If I'm risking 1, am I getting 1? If I'm risking 1, am I getting 2? If I'm risking 1, am I getting 3? You need to question yourself. Like, okay, if I'm risking 1, what are my expectations? Do you understand? So let's say you are risking 1 to get 2. That is, if you are risking 5 pips, you are willing to get 10 pips. So now for this case, we are risking 36 pips. Of course, you multiply that by 2. You can use this. This app is actually good. It calculates it for you. Just extend your take profit to 2. You can see. So 74 pips. I'm risking 36 pips to get 74 pips. So now if I should place this trade, it means that I'm expecting my target to hit here and my stop loss order, the amount that I'm willing to lose, that I'm willing to risk is this point. So that is that concerning risk management 1. So, and then the next thing we have in line is MetaTrader interface. So now MetaTrader, for those who are new to Forex, who don't know what MetaTrader is, it is actually the application that you use to place your trade. It is the application that you use to place your trade. You have your trade execution, all those that. This one that I've been showing you this far is TradingView. On TradingView, you cannot place trade. You cannot place trade on TradingView. You can only use it to analyze. You can't place trade here. You only use TradingView to analyze. We don't place trade. So this is what TradingViews are useful for. So I'm going to be walking you through that, and we have the our second series closed. So I'm recording through my laptop. So I don't want to use the laptop MetaTrader interface, as I know that most of us will be using our phone to execute our trade. So I'm going to make a video with my phone and then, join that together with this.
Yeah, hello guy. So I'll be showing you the interface for the MetaTrader. We actually have two MetaTrader app. We have the MetaTrader 4 and we have the MetaTrader 5, as you can rightly see on my screen here. MetaTrader 4 and MetaTrader 5, but the one I'm currently using is MetaTrader 4. The MetaTrader 5 is just like an upgraded version of MetaTrader 4, but what is mostly common that is used among traders is the MetaTrader 4. So let me just toggle on it for you to see the interface. So now here is the interface for the MetaTrader 4. This first one shows you the codes. It shows you the various assets, instruments that you are trading. So on my own screen, I only have 4 of them that I'm trading. So these are the 4 that I'm trading. And here, this second one shows you the charts. It shows you the charts. This is the chart, and this one here shows you the ongoing trade that you have, and here shows you your history. This will show your history, and here shows you news. So this is the interface. And if you want to add more instruments to this place, you just click on this plus button and then come on Forex. As you tap on it, it's already been added to your codes. You can see that we have more currency now. And same as well, if you want to delete it, just click on this pencil sign, click this delete button, and then you can just delete them all. And just delete them all. You can see that I'm back to the 4 pairs that I have initially. So this is basically how.
Yeah, so that is it, guys. So if you love my content, I want you to subscribe to my YouTube channel if you are yet to do that. Like this video, comment below, because your like, your subscriptions, and your comments will actually be a motivating tools for me to actually want to do more. So subscribe to this YouTube channel as we'll be meeting in the final episode. So peace out.